So let's just dive into the data map, which is the most important part of setting up Corelytics. On the left, you see the source data accounts. These are your accounts from your general ledger. And on the right, we have a standard chart of accounts that we use for the purposes of being able to compare your company with others so that we can do a reasonable job of updating benchmarks and understanding how your company compares to others. And so the process is pretty simple. You select an account from your source data accounts. You map it to the correct account, standard account, and then you can assign that particular account to one or more lines of business. In this case, if I know that account is completely managed services, then I would just make that change like this and save allocations. Each time you make a change, you'll hit the Save Allocation button. When you're done making all your changes, you can go back and hit the Commit Data Map button again, and that recalculates all of the graphs and displays that you see. So it's just a simple matter of going through a line at a time, make sure that your source account is pointed to the right account here, and has the correct percentage for line of business. When you first load your data, you'll get a default data map. Everything in the income group will be mapped to sales, and the other line of business, everything in the cost of goods sold group will be mapped to cost of goods sold other, and also to the other line of business, and all expenses will be mapped to other expense. So you will see something when you first start up Corelytics, but the real benefit comes when you take some time to make sure that these are all mapped appropriately. If some account is not in the right account, one of your source accounts is not in the right standard account, then you can very simply come up here and remove it, find where you want to put it. In this case, I'll just put it back because that makes the most sense for this one, and then again the appropriate percentage, and split it if you need to. Save allocations. Now, when you get to expenses, it's kind of tough to decide how much of advertising and promotion, for example, is attributed to any of those lines of business. So we've developed a dynamic allocation where we take your total revenue for a month, calculate the percent of revenue for each of the lines of business, and use that percentage split to map anything that you've marked as a dynamic allocation. So if in 1 month your split between managed services and time and materials is 70% to 30%, then all of the expenses for that month will be allocated to 70-30. That way you don't get any 1 month where there's some big expense that overwhelms the revenue for that particular line of business. That process is also pretty straightforward. When you get something that's, again, it will all be mapped to other expense. So the first thing you would do is change the allocation method from fixed to dynamic, remove it from other expense, find the right account to map it to, and save allocations. Pretty straightforward. It's the only time you have to really do this. You'll visit this once at the very beginning when you go through the setup. You'll come back here if you determine that your initial setup is not correct and you'd like to make some changes. You can make changes here at any time. And then each succeeding month, if you happen to add a new account to your chart of accounts, when you load your data, Corelytics is going to discover a new account that doesn't know what to do with it. You'll get a notice when you first log in that your data map is out of balance and needs to be adjusted. Just come back in here and find the one or more accounts that will be in black type instead of green, and map those. And when you're done, commit data map. in the balance sheet area, our data model does need a line of business for each account, but in general terms, for example, for accounts receivable, if you knew how much of your receivables came from managed service customers versus time and materials customers, that's really not an important piece of information. Financially, what you really care about is are those receivables collectible. So unless you have a real strong reason for doing so, my suggestion is just use the fixed allocation for all the balance sheet accounts, and then just leave the line of business, the service line of business, the first one, at 100%. If you change, for example, if I actually moved accounts receivable to here, for example, you'll notice that the default is to this first bucket anyway, and that makes it a lot easier, a little quicker to finish the mapping. I want to point out a couple of things just so that you understand. Make sure that if you're a sole proprietor, or if you're an LLC, or if you have distributions from equity, make sure that you map these appropriately to the equity distributions, that this amount will feed into an analysis for owner compensation that we have. If you have any accounts that are mapped to non-operating accounts, other income and other expense, typically this would be things like gain or loss on sale of assets, any kind of extraordinary gain or loss. For example, I had a customer who had flood damage and got a sizable check to fix that. That's appropriately not something that you want to consider in the results of operations. So anything in other income and other expense will be excluded from the calculation of profit and loss in Corelytics. So if you have things in there, some people will put depreciation and interest, those kinds of things, please make sure that you map them appropriately. Depreciation and interest should be in interest expense should be in expenses, and if you're interested in the calculation of earnings before interest, taxes, depreciation, and amortization, or EBITDA, then we have a place where you can actually see that calculated as well. There's also a spot for owner pay and owner incentive. This is a situation where a typical small company, owners can pay themselves anything they want if there's cash available. If you're doing a financial statement for bank, or if you're starting to get involved in any kind of acquisition situation, either you're acquiring a company or being acquired by a company, bankers will want to know what you would have to pay someone to do your job, the owner's job in this company. And then anything over and above that is considered incentive pay because it's discretionary. So this allows you to split the owner-based pay into what you would pay a person to do that job who was not an owner. The rest of it is an incentive. And then we ignore this line for purposes of calculating results of operations as well, because again, there's an owner compensation where this all folds together. And if that's if you need more information about what I just talked about, please you can ask the question later or send me an email. I'll be happy to go over that with you. So when you're all done, after you save the last allocation, you hit the commit the data map button here, and you're finished. So that's a big chunk of it. Are there any questions about the data map at this point? Feel free to jump in and raise your hands, and I'm happy to answer any questions. Okay, it's pretty straightforward. It's just a matter of going through one at a time. And remember, there's no wrong answers. If the analyses don't look correct later on, you can come back and adjust it at any time.